Oh,
Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bertha Hurt and Lanny, your favorite dividend investors out here in all of social media. Why? Because we've been doing this damn thing for over 11 years, going on 12 years.
let's go, everybody, and let's keep the momentum going. But first, subscribe to the channel. Give this video thumbs up. Holla at your boys, the Dividend Diplomats. Before we jump into this video, this exciting topic today on what 2025 may be looking like, we have some housekeeping here, don't we, Lanny? We have
We
some
do.
housekeeping.
We've got a DD swag giveaway winner from last Sunday's video, guys, and you'll see it here on the screen. We also commented on the last video on the person's comment. But David Frank, where you at, my brother? You've been
Yeah.
commenting. Your name is in the mix a lot. So you won the DD swag giveaway. Email us. We sent that over to you on the last video, and then we can work out what swag you're about to get, guys. So this is the last Sunday video of 2024. So to spice things up yet again, we are doing a 300 like swag giveaway
Oh,
as we talk about my 2025 dividend investing journey, what 4 steps and plans I have for the dividend stock portfolio this year. So, what I need from you is to like, subscribe, and comment what else you think I should do to the portfolio or what your thoughts are with my 4 steps I'm taking.
love it. I thought you were going to say get this to 2024 likes, then we'll do it. Hey,
Hey,
if we get to 2024 likes, we will pick 2 people for the swag giveaway. So how about that, everybody? The stakes have been raised, but let's focus now. 2024 is behind us. The S&P 500 is nuts. You entered the year when Bitcoin was nowhere close to 100,000. In fact, started the year around 44,000. We're leaving. Bitcoin's on the verge of touching 100K and eclipsing it once again after it already did once. S&P 500 above 6,000 right now. I don't know how many people would have thought that was a reality at the beginning of the year. A lot of great stuff's happened in 24. Let's move ahead to 25, though, Lanny. Let's look at what's on the horizon for next year.
guys, there's going to be an overall theme to what my dividend stock portfolio is going to look like here in 2025. I spent a little bit time in 2024, as you guys have probably realized, a little bit of cleanup, a little bit of slimming down and exiting a lot of positions in the once over 70 plus position stock portfolio. Did a lot of easy selling in the portfolio to make it cleaner, more concentrated, but still not as concentrated as where I want it to be. So 2025 is all about refining the dividend stock portfolio. We'll start with the first step I'm taking. And,
Number
again,
one.
number one, exactly, guys. Currently on my Ally investing account, I still have 61 individual tickers right now riding over there. And, I want to get that lower. I want to break it down at least 10% of those positions, if not more, for low hanging fruit that are ripe for the taking with some heavy long-term capital losses. Leggett and Plot being one. Bert, I know you share the pain here. I know there's probably some viewers out there that share the pain. Why? Because it has zero dividend growth and it has a low dividend yield at just over 2% after the dividend slash and gash.
Yeah, the former king is no more. And now, even if they do return to growth at some point in the near future, it's probably not going to be a lot. It's probably not going to be a heavy dividend again for a long time, which was always the attraction of Leggett and Platt. You at least got paid.
You at least got paid. You're getting paid to wait. You're getting paid. And it was at the time growing a dividend, right? But that gets a nice segue into stock number two. I'm just going to list a few tickers, guys, just so you can see painting the picture on how I'm going to get there. Intel, INTC. Obviously, I've been looking to exit, selling cover calls, and hey, if it gets called, great. If it doesn't, I'm still making some money on Intel stock. Why? Because they also paused that dividend. So currently there's no dividend coming from Intel stock. And what that means is there's also no dividend growth, guys. And then that is a nice other segue to dividend stock number 3 off from the growth front, Kraft Heinz. It's been a dud, kind of a no mover.
Yeah. It's the acquisition with the combination of Kraft and Heinz just isn't working out the way anybody thought it was. And now they're stuck in that issue that so many other consumer staples are in, where it's hard to grow. They're too big. The business is going to start coming under attack with the new administration, and they have a lot of debt. So it's just a tough stock right now to be in.
Yeah, it's a tough stock, guys. Not a bad company. You want them to do well, but if it doesn't fit a growing dividend income portfolio, then it doesn't fit a growing dividend income portfolio. And then there's also Paramount, Para. I've been trying to sell as many covered calls as I can as well, so I can either exit or earn some more income on a 1.92% yielding stock with zero dividend growth. So just 4 stocks alone, I just listed off there that have zero growth. So my portfolio is getting weighted down by, I don't know, 10 grand of zero dividend growth stocks that I have invested amongst these 4, as well as an overall average yield of below my portfolio average yield. So again, these are what I call not anchors, but these are sinking the portfolio, because they're not here to build a foundation with the portfolio with these 4 stocks.
No, and after a while, it's worth giving them a shot to see if the turnaround story can be real. And eventually, you might reach the point where it's just time to cut bait and move on. Doesn't matter when you should have moved on, if you should have invested them. That's in the past. That happened. It doesn't matter. You have them, but you might as well just rip the Band-Aid off and do it. Especially if you're trying to cut down 10% of your positions. You're trying to get down 6 positions from 61. Here's 4 low-hanging fruit at the beginning of the year that you're looking at, you already want to chop out.
Yeah, exactly. So I'm just trying to at least show you the plan, and that'll improve overall, guys. It's all about improving the portfolio, all about making sure what you own matches your goals. It's personal finance, guys. That's what the point of this channel is. The point of helping you guys out there is to build your own personal finance goals, strategies, and help you get from A to B. And I will tell you, these 4 stocks are not helping me get there.
All right, so that was step 1. Number 2, what are you going to do with it? And I think that's the most important thing. That's always the holdup when we talk about this. When you sell a stock, you have to put the proceeds somewhere. So what the heck are you planning on doing with these?
So not only what I plan on doing with this, but what am I investing in general in 2025, guys? It's going to be all about just focusing on those core foundational positions to the portfolio. I'm not going to get sexy here and add many new positions, if at all, in the portfolio. Going to continue my Vanguard trifecta. You betcha, guys. I'm not stopping. Weekly VYM, daily VOO, daily VIG. Again, trying to get those and that concentration up to where I want it to be of the ETFs, trying to get to that 50% concentration. So sticking with my Vanguard ETFs through and through. Then it's looking at the core positions, your Pepsi stock, your now Paccar stock. I'm a huge fan of,
Yep.
Your Johnson & Johnson, taking a look at looking at these boilerplate, boring, but solid companies, and making sure I add to them.
Yeah, the big blue chippers, the companies that you can see that are everywhere. You're not getting cute. You're not getting sexy. You're just trying to build great positions in your portfolio.
Yeah, I mean, it's nothing's great about owning $200 of a dividend stock in a in a massive dividend stock portfolio. It's just not going to move or shake.
It's annoying. So you've talked about wanting to add to your ETFs. So we get that. You're still going to do that no matter what. Building these big foundational positions. Is there anything else you want to do? Is there a third leg of this stool, or are you just going to focus on those 2 strategies?
It all depends. And, this has kind of been what I've been wrestling with my mind for the last few weeks, few months, especially when you were buying Google stock, it's like, gosh, yeah, that's a great stock, great company, or Alphabet, buying Google.
I still call it Google. I don't care.
Yeah. Buying a higher tech, but a dividend, growing stock. And it's like, well, I got so much exposure in VOO from the big tech But it's like, do I go then, if I slim down, call it 7, 8, 10, 12 positions, and then say, okay, I'm going to allocate to like one company that I use daily. I've got an Android phone. I use Google products. We record these on Google Chromebooks. I mean, we're very big into Google. Bert's got an Android phone as well, for now at least.
Oh,
Hopefully,
yeah, I just got the Pixel last year. This thing's not going anywhere. I love it.
yeah. So it's, again, thinking of, okay, what do I use in my life and what do big businesses and
Well,
large businesses use in theirs?
where's everybody watching this? YouTube. Who owns that? Google. Like,
Right.
so think about it. It's,
Right.
yeah, I'm with you. And obviously, I'd been buying Google, but there are other companies too, because the world continues to shift towards tech with the AI boom that's going on, with all the services that need to prop up AI, with all the chips that need to be manufactured to help support the AI boom, all the data centers. There's so many different ways you can play at growth with tech, but also in a safe, conservative way with these type of big blue chip tech growth stocks.
Yeah, I agree. So, again, just still wrestling with that idea. But guys, again, I'm getting the exposure regardless within, VOO. So I'm getting it there. And then if there's like some swan moment where, yeah, if Google drops to 150 share, or if Microsoft decides to drop 30%, then it's like, oh, okay, I can just concentrate on just one big $10,000, we're talking like,
Yeah,
investment in there, just so I have a nice sizable position, and nobody could take that entry price away from me.
yeah, that's right. So we talked about clearing some crap. Then you talked about how you're going to invest in 2025. Are you ready to put a dollar amount towards your dividend income goal of what you want?
Yeah, yeah. Let's talk dividend income, guys. Let's talk about how much income do you want to add? How much passive income do you want to add? Again, this is additional passive income. So, my portfolio already is pushing the ceiling on the taxable portfolio, close to 30K. Very lucky. But guys, I've been in the game for a long time. We'll leave it at that. Been at it a long time. So the snowball is there. The avalanche is there. 2024, I'll get close to adding almost four. And it gets harder as you're investing into the ETF market, the ETF space, such as VOO, VIG, because you're adding in at 1.3% to 1.9% dividend yields. But the point of that is for the future dividend growth and appreciation of the portfolio. So with more of a focus on the ETFs, and Kraft Heinz yields over 5%. If I'm exiting also some low hanging fruit that yield high, I'm not necessarily going to replace it with high, yielding stocks.
Yeah,
Bert and I just mentioned Google stock is not a high yielding stock. It's 0.4%.
yeah, I ran into that issue too when I was replacing things. I gave up some income, especially when I was going into Google. I gave up some income on stocks that were earning 4% to do it. I gave up some income when I dumped the 4.5% Spartan Nash, 3% Mondelez. So it's like sometimes you have to sacrifice the higher yield to get it into more of the growth feature and the growth alignment that you want.
And I know, Bert, you're just doing some quick math for me. So if I were to not consider dividend reinvestment or dividend growth, to add $3,000 of forward income, how much would I need to add at what percent yield?
All right, so let's normally I'd take this exercise and say 3%, but with how Lanny's planning to add, to Lanny's point right there, he's not putting all of his money into the high 3.5% yielding funds and stocks. He's talking about quality. He's talking about the lower yield, higher growth stocks. If he's going to do it an average of 2%, that's $150,000 capital that has to go in, which could come from new cash or reinvestment. Again, not dividend growth. We're not factoring that in here. 2.5% yield, 120,000. 3% yield, 100,000. That's an easy one. That should have started with a softball, but I had to make things a little more difficult.
No, but I mean, you're exactly right. Like, I just don't have 150 grand at 2%, hanging around the house. Doesn't matter how many things I sell online, or, yeah, I mean, I'd have to pick up either the second and third and fourth jobs just to get to the 100.
You only have so many kidneys and so much plasma.
Exactly, guys. So, but that's why doing this for a long time helps you, because if the portfolio, we can roughly say, let's just say it produces 30 grand of income, even if it grows, if it reinvests back in at 2.75% throughout the year, 30 grand at 2.75%, is going to add in a nice punch. I know Bert's cranking in the math here for me real quick. Yeah, that takes care of almost a third, $825 it adds. And then the dividend growth right now, the average is actually only about 6%. Again, which I'm not happy because of all these 0%ers that I have in the portfolio. But, it should add, again, another, if you do the quick math, 3 times 6, 18, should add another $1,800, right?
Yeah. So yeah, it'll be a fun journey. $3,000. It's going to be a fun challenge here. And everybody, let us know too if on the channel you want to get some more frequent updates here from Lanny. We can build that into some of our videos here. Putting out 5 videos a week. If you want to get some updates on how Lanny's progressing throughout his journey to $3,000 forward income, we could easily throw some of those videos together here on the DD channel.
Yeah, let us know, guys. So, and again, that's the third step is like, okay, I'm going to be investing, but I'm not going to be doing out some bangers here. It's going to be a slow approach to add 3,000. So, but
Hey, it's
go ahead.
no, no. After you.
No, I was just going to say it's all about, making sure that I'm setting this up for not just the next year. I don't want to just sprint and then put my hands up, but I'm trying to set this up for the next generation, guys, not just the next 10, 20, 30, 40, but the next, next 100 years.
That's right. So that's the third step, everybody. Lanny's going to sprint, not sprint. He's going to slow burn it up to $3,000 new income. Lanny, is there another step? Is there anything else you want to comment on about what you're trying to achieve for your portfolio?
Yeah, guys, we've all been there. So to recap it in this fourth step, it's overall reducing the complication of the portfolio. And what do I mean by that? First, it's the first step, right? It's reducing positions. Okay, great. Next is, oh, I like it at $100 a share and it's trading at 101. Don't complicate it. Buy the effing thing. You're right there. So it's not complicating your purchases or your sell. So if Intel's at $24.90 and I want to sell it at 25, just sell it at 24.90.
Yeah. I said the approach of what you talked about the buying and the not being a stubborn has been something I think I've been decent at over the last year. I don't really care. But if I like it at a price, I'm going to buy it. I'm not going to wait for it to, and if not, I'll just set a limit order again. Like, hey, I like it at say 150. I really wanted 145. Buy some at 150. I'll set another limit for 145, and I'll get the best of both worlds, and I'll average my way down.
Yeah. So it's not, yeah, again, I agree. Not complicating the purchase or a sale decision. Then it's also like, hey, your investment brokerage, number of accounts. I've got a lot. I still have old 401k at Vanguard that I need to decide and just not complicate where I want that egg to move. That makes sense, period. That reduces the complication, guys. So that's, again, it's all about sleeping better at night. It's all about, being more efficient with your time, and
100%.
being able to review all your personal finances.
100%. So let's go through. Let's just list out the summary for Lanny's 2025 investing goals here. Number one, trim the positions down. You have 61 positions. You're looking to cut 10%. So that's another 6 positions going out the door. That was step one.
Yep. Step one. Step two, focus on the core holdings, the 3 Vanguard ETFs, and then the large blue chip stocks, J&J, Pepsi, Paccar, Shell Oil, even for me, being my one energy player. Step three, adding $3,000 of income. Not a huge year, but it's going to be a solid year. It's not going to be a fast year. It'll be a long game here to get there, guys. Lastly, step four, reducing the complications to investing in personal finance overall, reducing the complication in the buying and selling, reducing the number of positions, reducing the number of investment accounts, guys, making your life easier, more efficient. Try not to complicate it. Keep it simple. Stupid does work here, guys.
Yes, that is very much true. So everybody, let us know, what do you think of Lanny's 4 goals here. What are you trying to do as well in 2025? Let us know. Are you trying to trim positions? What's your income goal for the year? What's your target? And are you going to sprint or are you going to just take a nice slow pace all the way through the end of the year?
Yeah, guys, remember 300 likes, subscribe, comment below. We also have a Patreon page. We'll have to make sure we put that link in there because Bert and I were putting out our updated portfolio pages, really putting out there almost on a weekly basis. Sometimes we'll sneak in a few of our purchases and sales and what other stuff that we're doing. We put it out there. So, it'd be great if you could join our Patreon community as well.
Yeah. All right, everybody. Let's end this year in style. 2024, let's put the bow on it and let's focus on crushing it and reaching financial freedom in 2025.
That's it, baby. Guys, that was Bert the Herd and Lanny. Oh, should I even say, all right, you're either with me or you're against me on this one, Jack. That was Bert the Herd and Lanny from the DD. Over and out.